Our cities are burning. The anger of many communities is palpable, from the capital to our business hub to coastal areas. Where is all this frustration coming from? Economic exclusion is one reason. Let's get started. Good evening and welcome to the Democracy Gauge. I'm Bongani Bingwa. In assessing 25 years of democracy, tonight we focus on financial inclusivity in South Africa. The so-called informal sector, from the taxi industry to hawkers selling amagwinya or vegetables, to those who make clothes from backyard dwellings. This is the cash economy. No bank accounts, no minimum wage, no access to loans or financial markets. And this means that many of these businesses are stuck where they are, with very little potential for dramatic growth. Of the South Africans who do have access, quite often the only reason is because the employer said so. So, how does this exclusion perpetuate the continued inequality in our country, and what can we do to reverse the situation? And that's why tonight we're asking the question in our poll, as we always do here on the Democracy Gauge, looking at financial inclusion. Today, we're asking the poll, can South Africa achieve financial inclusivity for all? We've got our three standard colors for you to choose from. Of course, green is yes, yellow is maybe, and red is no. You can interact with our poll on Facebook and on Twitter, remembering, of course, to use the hashtags SABCDG25 and hashtag SABC News. Now, our producer, Lindiwe Mabena, looked at those who remain included in terms of economic activity, but don't have access to the financial system in our country. Take a look.
The foreign direct investment South Africa experienced during Nelson Mandela's tenure as president is now history. Government is trying to woo investors back. Adding to its economic difficulties is sluggish growth, a higher unemployment rate, and an increasing gap between the rich and the poor.
Corruption and patronage, as well as poor education, are some of the factors that are preventing many South Africans from participating meaningfully in the economy.
Refilwe Nzeke's friend has been struggling for years now to grow her quantity surveying company. Although her skills and experience are lauded, she cannot get tenders because she refuses to bribe officials. She also struggles to make inroads into the private sector.
When you try and break into the space, it's still very much closed off. I call it the boys' club that people are struggling to penetrate. So, for example, because they worked with a Marion Roberts, the Marion Roberts people know that the person is competent and qualified to do the job. So they'll try and use them as a reference, or say, when there's a big job, especially big jobs like malls being built, they'll say, can you, Miss So-and-so, go to attend this meeting and tell them that I've referred your company to go. And because it's not the Marion Roberts person, when they arrive to the meeting, the person will basically shut down and say, or the players who are going to discuss this program, this project of building a mall, will kind of then say, oh guys, it's nice to meet everybody, but we can't carry on with the meeting.
As a politician and social rights activist, Nzeke says Zanele's predicament is one faced by many black South Africans, particularly women. Victims suffer in silence and survive on small projects to avoid victimization. But Nzeke believes it's time they put up a fight.
More people like herself need to actually put almost open cases against these people and say, I went for a tender and Ulindi asked me for 1, 2, 3, like an affidavit, so that they can be taken to task.
It's also still difficult for majority of black South Africans to access financial products like shares and bonds to finance their homes and businesses. Nzeke says banks, the private sector, and government need to re-strategize and come up with ways to address South Africa's long history of financial exclusion. She wants more to be done to make the majority of South Africans financially savvy.
People are not even aware that there's tax-free savings. And people don't know how to invest money. We still also have, there's a whole lot of things where we need to educate ourselves as black people to say, for example, why am I driving a Range Rover when I actually can't afford it? Maybe I should look at a smaller car that I can pay off in 5 years and invest. Maybe I should buy property, then I can start having assets. How many people even understand what an asset is in amongst our black communities?
While systematic reforms have been put in place and much more needs to be done to build an inclusive economy, the message is also clear that ordinary South Africans must take responsibility for how they manage the little they have. Lindy Mapena, SABC News, Johannesburg.
Right, well, as you can see from that insert, there are multiple conversations to be had about what exactly financial exclusion means. We're joined now in the conversation by Saul Levine, who's the Executive Director at Trade and Industrial Policy Strategies. Saul, very good evening to you, and thank you so much for joining us on the Democracy Gauge. I suppose the first thing is let's just talk through the jargon and the definitions. What do we mean when we talk about financial exclusion?
So financial exclusion would be no access to a bank account, not being able to participate in the financial sector at all. What we have seen, though, is that we've made a lot of gains in South Africa over the last 25 years. 90% of our people have access to some bank account at some level. The problem is that 33% of people are putting money in through whatever it is, salary or getting a remittance from someone, and it immediately comes out. So they're not using the financial products. So the challenge is also using the financial services to save and to grow and build some resilience.
I said in my introduction that quite often, of course, we've got this, and we'll come back to it in a moment, we've got this large sector of people involved in the cash economy, but even those that do have access to financial products quite often do so because that's what the employer expects them. So there's almost a resentment, almost even a mistrust of the banking or the financial system.
Well, part of it is historically the pricing of financial services. So every time you press the little buttons on the ATM, you were charged. So the introduction about a decade and a half ago of the Mzansi account, if you remember that helped to reduce some of the financial services costs. But the problem was the first 2 or 3 transactions were free, so everyone got the money in and immediately withdrew it. There was no culture built up of let's save, let's try and keep the money in the account.
Well, let me take you on that because we're often told that South Africans don't save, for example, and yet we know there are many savings clubs throughout the country. The traditional Stokvel, for example, is an example of that. It's not that people necessarily don't want to save, but maybe these products or these offerings within the financial system don't seem attractive to them.
Yes, of course, but the Stokvels and savings clubs are really, really important, and they help build resilience amongst communities. So where those things are in place and people are using them, they generally are better off, because when they have a crisis, there's something that happens at home or in the school or a funeral, they're able to draw on those resources, which puts them in a much better footing. So it doesn't have to be a formal bank account, it can be through your community.
So talk to me about the impact of financial exclusion.
So the biggest impact is really around the business sector, because what we don't want people to start borrowing to buy things that they don't need. So what you're really looking for is how do we get more resources going for productive use? So the taxi driver can get a loan to buy his own taxi
or the next one.
Or someone can get more stock for their shop so that they can trade on more items. Those kind of opportunities allow for more growth. We have in this country very, very low lending to small businesses and micro enterprise. It's very, very low.
Does the financial system, do these institutions take that market, that informal sector, seriously enough?
It's difficult.
Too risky?
I think depending on which level you're looking at. So that very low level, the problem is not that they don't take it seriously, it's just that the interest rates are really, really high. So if you are an informal trader and you want to borrow, you're paying 4 or 5 times more interest than yourself.
Why should it be the case? Why should it be that the people who need the funding the most are the ones who are almost punished by the system instead of the other way around?
That's the problem. So there's the people who lend the money have a good reason for saying we want that. But the problem is that it is too expensive for people to earn a decent return.
Can government help with regulation?
I think they should.
And what would that mean?
So what it means is, can we find a way to encourage the banks to lend to small enterprises in a different way? There's opportunities that we could bring in guarantees from the state to enable it. And there's other mechanisms that the government can put in place to incentivize banks through capital adequacy ratios. I won't go into what that means, but to allow banks to lend more into that space.
Our particular history, of course, will mean that this kind of exclusion is racialized, but it'll also mean that women, in particular, rural black women, are not included, even in the urban setting. How does that affect things?
Well, women generally have to take responsibility for things like schooling, for looking after the household, so it puts them on the back foot. But women are also more likely to participate in stokvels or savings clubs. So they generally, women find a way of overcoming those challenges, but we do need to find more institutional mechanisms to help women with the financial inclusion.
You talk about the reasons why financial institutions will charge, say, the interest that they do. We know, of course, people in the cash economy will rely on loan sharks who often charge them exorbitant rates too. They'll often at times rely on family members or friends in similar circumstances. There's a struggle to repay some of those loans. What's the case to be made for financial institutions in terms of the potential for profit, the potential for doing good business with this untapped sector?
Yeah, how do we get them to invest in an area where they don't see value, or they see value, or they see the risk is too high? So some banks have gone into that space, but they've linked it to people who are already employed, so payroll-based lending, or they find a way to make a profit out of that industry. But what we also need to be careful of is that that profit doesn't come at the expense of poor people. So it's also important to encourage a savings culture rather than a spending culture. So peer group pressure to save rather than peer group pressure to own or buy something that you don't necessarily need.
I saw what really seemed to encapsulate our discussion, a quote where somebody said, "Poverty is expensive." Talk to me about the expense of poverty.
So the example that I gave, where loans to the informal sector are much higher, they are more difficult to access, and that means that it's difficult, but also certain financial products like insurance. So you've got a small bakkie, it gets stolen, it's not insured because you're in the informal sector. It's going to take you a very long time to raise enough cash to replace that.
Or you've got a small business, you're a hawker, you get into an accident, you're in hospital, you don't have insurance to cover your time away from work. We'll continue this discussion with Saul Levine, but do you feel financially excluded? Does the system take into account your needs? Don't forget to participate in our poll question. You can do so on Facebook and Twitter. We're asking the question, can South Africa achieve financial inclusivity for all? Stay tuned. Welcome back. We're talking financial inclusion or exclusion, as the case may be. We're continuing our conversation with Saul Levine, the Executive Director at Trade and Industrial Policy Strategies. Saul, let's just get back into this conversation. I mean, we talked about the potential for the cash economy. How much does that contribute to GDP, broadly speaking?
It's not often recorded, so to give a specific figure would be quite difficult. And it's, there are some measures that the statistics SA use, but I wouldn't be able to give that to you right now.
Sure, but would it be substantial enough for there to be potential for people to look into it a little differently than we have so far?
Yes, absolutely. There's a lot of money that's moving around, and all of that money that I mentioned earlier that gets withdrawn immediately goes back into the cash economy, and a lot of it is circulating and creating employment and opportunities.
Countries like Kenya have come up with innovations like the M-Pesa system.
Yeah.
Would that kind of thing work here, and why haven't we come up with a similar system?
It's been tried and it didn't work. There's new efforts to resuscitate that kind of approach. We have an existing approach that people use. There are remittances that go back into rural areas. In the past, it used to be you gave the money to the taxi driver, they earned a commission, and it would get home. Now there are bank accounts, there are ways of sending money electronically, and the cell phone technology is there, but hasn't been widely adopted as it was in Kenya.
But again, I suppose one of the things is that even with the electronic system that we have, you still have to be within the system, for example, to send an e-wallet.
Yeah, exactly.
Banks often make the argument that in terms of their spend and their investment in setting up infrastructure and physical branches, for example, that's one of the reasons we see banking costs so high, particularly in areas where those are not used too much.
Yeah. So part of what we're seeing with the efforts by the state to use the post office as a banking facility would enable people who don't have access to those branch offices to get a bank or a facility to put their money in to get access to financial services. The banks haven't gone beyond certain small towns into much deeper rural areas, and a lot of work has been done over the years to set up cooperative banks which are located in villages and other types of ways to include people in the financial system.
So one of the things we've been discussing, of course, in this particular week, given the flaring up of the violence that we've seen, is that many South Africans feel excluded from the system. They feel that they are passive bystanders watching economic activity and they are not involved. That's always going to be a powder keg.
Absolutely. And that goes beyond the financial literacy or the financial inclusion. That's a political exclusion or it's an economic exclusion. And people are frustrated. They want to see change. They were promised change. And they want to see more opportunities happening. It is difficult because globally we're seeing there's lots of conflicts happening. There's lots of trade wars happening. And our economy is not driving the way it should. So we are seeing those tensions being played out. In other countries, we've seen millions of people go out into the street and protest. So it's not surprising that we are seeing some activity here.
All right, what's the way forward? What could some low-hanging fruit be?
So I think the first thing that's most important in terms of the financial inclusion discussion is that we need to improve financial literacy. We need to have a culture that's developed of peer saving so that we can build resilience in households and communities so that there are resources when those emergencies come up. And then I think
I'm sorry to interrupt you again.
Yeah.
I mean, I appreciate that, and I think that would be a great scenario, but quite often many South African households that do have some form of income are barely, a paycheck away from, near disaster. In that kind of setup, I mean, what can we tap into in terms of the existing systems, like the Stokvel arrangements, like savings clubs, that will at least put collective savings, to be able to help us deal with the tough times when they come?
Well, I think there are already many mechanisms around that, and we've also seen the cost of opening bank accounts reduced dramatically with the technology that's come about. But we also don't want to see people going into microloans that are very expensive because that leads to worse problems down the line.
Sure.
So it's to realize that there will be a crisis at some point, and even with the few resources that we have, can we set something aside because we know the rainy day is coming? Yeah. That becomes important.
What about innovations, though, in the industry? I mean, I know countries, for example, where they've tapped into the airtime market, where that becomes used as a currency to allow for a penetration into insurance products, for example, and other financial services. Are there things that we just need to think a little bit more cleverly about?
Absolutely. So in the workplace, for example, we could have forced 5-year policies. In our workplace, we've done that. We've said to staff, would you be interested in a 5-year endowment policy where in 5 years you'll get 20, 30,000 rand, putting aside a couple of $100 a month. So some countries, those are legislated where you have to, every month, as off your payroll, you're putting money aside and the employer is contributing. And then after your 5-year period, you're getting a cash amount to help you through things that maybe you want to buy a car, then you don't have to take out loan finance, or you need to pay school fees, you've got an extra income coming in.
Or a deposit on a home.
Absolutely. I mean, buying an asset would be absolutely critical.
25 years into democracy, then, as we round up our conversation, I'm going to ask you to gauge our democracy as far as this issue is concerned. Once again, green is for yes, yellow maybe, and red is for no. How have we performed? And I suppose importantly to our question tonight, Can we achieve financial inclusivity for all?
Okay, I'm going to give a green because I think we've done a huge amount to include people in the financial system, but there's obviously much more that needs to be done.
So, Levin, thank you very much for talking us through what all of this means, and thank you for popping in to the Democracy Gauge. Right, after the break, we will meet 46-year-old Jabulani Stanley Mahlangu, the caretaker of the once iconic Caledonian Stadium in Pretoria. Stay with us. Welcome back. Now, as you know, through the Democracy Gauge, SABC News profiles a different South African and their assessment of the last 25 years of democracy. Tonight, of course, we are in Pretoria. We are looking at the once iconic Caledonian Stadium in the capital, facing possible closure. It's a multi-purpose venue built in the 50s and was once home of the Arcadia Shepherds, one of the oldest clubs in the country. The caretaker of that stadium is 46-year-old Jabulani Stanley Mahlangu, and this is his story.
Jabulani Stanley Mahlangu. Ngikamuka eMpumalanga, ngihlala kwaNdebele. I'm doing a lot of jobs. Security caretaker, in charge la kuma-field. I-ground ngiyimi engil-maintainelako, engilibhekako, engilungisako, everything. And la ngibheke equipment yalabafana, everything, ama-balls, coins. Le stadium lesi sincede ama-player amaningi, ngikhuluma kanje, the lot of players baku-PSL. Mangicabanga kahle uMark Fish waqala la ibhola. Ngigrome ama-player amaningi lana, ngifuna nalaba abancane nabo baye phezulu. Kufana njenga laba ku-PSL manje. Kwamanje kuthiwa City of Tshwane bona bafuna ukwenza ipark. Angivumelane nayo indaba yepark. Mina kwami ngizajabula mangibona le stadium sirenovatiwa. Sibe kahle kukhiphiwe le green, kufakwe i-green entsha, everything, kube ne-security, and then kula mina ngizawuthaba khona nami ngibona ukuthi cha labafana laba esibakhulisako kwamanje nabo bazaba nekusasa elihle. Ngingathi izinto zizawushintsha, ngingathi izinto ayisoze zashintsha ngoba ngani ithembo likhona, ithembo alisekho. Iya angali mina ngizawuthemba mangibona le stadium sirenovatiwa sifane njenge stadium ezinye. Ngo-1994 yes ngangikhona ngo-1994 but ngokhetho. I remember ngangisese ne-problem yokuthi ngithole i-ID, ngangana ID. Kwamanje ngina everything, i-ID ngikhuluma kanje nginalo, and umlungu wami, my boss, coach Lucky Mana, uyena lo wangithathako uLucky Mana. Kudala angazi, kudala angibona kule stadium. I remember iSuperSport United ngayidlalela la kule stadium, and mina ke ngile SuperSport United fan. Mina indaba ye-democracies ngibona ukuthi izinto zizawulunga, izinto ayisoze zalunga. Ithembo likhona, ithembo alikho. Ngoba ngani ithembo lizaba khona the day ngibona i-stadium lesi, i-Caledonian Stadium si-renovatiwa. Ngoba ngani le stadium kwamanje nje ungathemba ukuthi even i-toilet ayisebenzi. Umuntu makacela i-toilet kuba nzima, ubona kungathi umncisha i-toilet. Ngani ngoba ngapha ngiyatshontshelwa, i-toilet ngiyazama ukuyilungisa close to 3 weeks ama-toilet abawamoshile futhi.
Right, it's a maybe for Jabulani Mahlangu. So before we go, let's take a look at what you had to say as the poll results come up on the screen. 18% of you saying yes, 22% maybe, and I'm walking out with a red flag because 60% say no. Thank you for watching. I'm Bongani Bingwa. Until the next time, ubusuku benzolo. Good night.